The cryptocurrency world is filled with anticipation. As of late May 2025, Ethereum exchange-traded funds, or ETFs, are a hot topic. Investors are watching the U.S. Securities and Exchange Commission for signals on more spot Ethereum ETFs. The SEC's approval of 8 spot Ethereum ETFs in September 2024 was a landmark decision. This step signals growing acceptance of digital assets in traditional finance. The market's reaction has been overwhelmingly positive. For those new to cryptocurrency investments, the term Ethereum ETF might sound complex. However, the concept is straightforward. An Ethereum ETF, or exchange-traded fund, is an investment fund designed to track the price of Ethereum, the native cryptocurrency of the Ethereum network. Instead of buying and holding actual Ethereum coins, you can buy shares of an Ethereum ETF. These shares represent an ownership stake in a fund that holds Ethereum, making the investment process simpler. These ETFs are traded on traditional stock exchanges just like shares of well-known companies. This accessibility means that individuals familiar with stock market investing can easily add Ethereum exposure to their portfolios. The fund manager handles the complexities of purchasing and securely storing the underlying Ethereum. The primary purpose of an Ethereum ETF is to provide a regulated and accessible pathway for investors to gain exposure to Ethereum's price movements. This regulated environment is a significant step towards bridging the gap between traditional finance and the burgeoning crypto economy. The introduction and approval of Ethereum ETFs carry profound significance. Firstly, they represent a major step towards the mainstream adoption of Ethereum. By making Ethereum accessible through traditional brokerage accounts, ETFs open the door for a much wider audience of investors. This includes retail investors and large institutional investors like pension funds and endowments. Ethereum ETFs enhance the legitimacy and credibility of Ethereum as an asset class. When a major regulatory body like the SEC approves an Ethereum ETF, it acknowledges Ethereum's standing within the financial landscape. This increased legitimacy can attract more research, development, and institutional support for the Ethereum ecosystem. Another crucial aspect is the potential for increased market liquidity and price stability for Ethereum. As more investors participate through ETFs, the trading volume of Ethereum is likely to increase, leading to more efficient price discovery. Finally, the approval of Ethereum ETFs fosters a more robust and transparent market environment. When discussing Ethereum ETFs, it is natural to draw comparisons with Bitcoin ETFs. Bitcoin ETFs were approved earlier, and have already witnessed substantial interest and capital inflows. Major financial players like BlackRock and Fidelity launched Bitcoin ETFs, attracting billions of dollars. Ethereum ETFs are widely anticipated to follow a similar trajectory of success. The market has seen how Bitcoin ETFs facilitated easier access to Bitcoin, and the expectation is that Ethereum ETFs will do the same for ETH. However, it's important to note that while there are similarities, there are also key differences. Ethereum, unlike Bitcoin, is not just a store of value. It's a platform for decentralized applications, non-fungible tokens, and decentralized finance. This difference in utility and underlying technology could influence investor perception. Some may see Ethereum as having greater growth potential due to its broader range of applications. Investors should be aware that market responses and capital flows into Ethereum ETFs might not perfectly mirror those seen with Bitcoin ETFs. The approval and launch of Ethereum ETFs are widely expected to have a significant positive impact on the price of Ethereum, or ETH. This optimism is largely based on the principle of supply and demand. When an ETF is created, the fund manager must purchase and hold the underlying asset, in this case, Ethereum, to back the shares sold to investors. As more investors buy into Ethereum ETFs, the demand for actual ETH increases. Historical precedent from Bitcoin ETFs supports this expectation. Following the approval and successful launch of various Bitcoin ETFs, Bitcoin's price experienced notable surges. Many analysts believe that Ethereum could witness a similar, if not more pronounced, price appreciation. Beyond the direct impact of increased demand, Ethereum ETFs can also enhance ETH's liquidity and market stability. While cryptocurrencies are inherently volatile, the participation of more regulated long-term institutional investors through ETFs could contribute to a gradual maturation of the Ethereum market. The approval and successful adoption of Ethereum ETFs extend their influence far beyond just the price of ETH. Firstly, they signify a growing mainstream acceptance and legitimization of digital assets within the traditional financial system. Each ETF approval, especially for a major cryptocurrency like Ethereum, chips away at the perception of crypto as a niche or fringe asset class. This increasing integration with established finance can attract more conservative capital and foster greater trust among the general public. Secondly, the regulatory clarity that comes with ETF approvals can set important precedents for other digital assets. The frameworks and standards developed for Bitcoin and Ethereum ETFs could potentially be applied to other leading altcoins. This trend is also expected to foster greater innovation and growth across the broader crypto sector. A more mature and well-capitalized crypto market is better positioned to overcome existing challenges and deliver on its promise of a more decentralized and efficient digital future. While the prospect of Ethereum ETFs is exciting, it is crucial for all investors, especially beginners, to approach this new investment avenue with a clear understanding of the associated risks. The most prominent risk is market volatility. Cryptocurrencies, including Ethereum, are known for their rapid and significant price fluctuations. The value of an Ethereum ETF will directly mirror these price swings. Investors must be prepared for this inherent volatility, and should only invest what they can afford to lose. Regulatory risk also remains a significant consideration. The regulatory landscape for cryptocurrencies is still evolving globally. While ETF approvals are a positive step, future regulatory changes could negatively impact the operation and attractiveness of crypto ETFs. Additionally, technological issues related to the Ethereum network itself could also affect the price of ETH and, consequently, the performance of Ethereum ETFs. Making informed decisions based on solid understanding rather than speculative frenzy is key to navigating the crypto space successfully. Amidst the developments in single-asset crypto ETFs, a particularly noteworthy innovation emerged in early 2025. Bitwise Asset Management received initial approval from the SEC on January 30, 2025, for a groundbreaking combined Bitcoin and Ethereum ETF. This product represents a significant evolution in how investors can gain exposure to the cryptocurrency market through traditional financial instruments. Instead of choosing between a Bitcoin ETF or an Ethereum ETF, this fund offers a blended approach, providing diversified exposure to the two largest cryptocurrencies within a single investment vehicle. The structure of the Bitwise Bitcoin and Ethereum ETF is designed to offer balanced exposure, with the allocation between Bitcoin and Ethereum weighted by their respective market capitalizations. For investors who believe in the long-term potential of both Bitcoin and Ethereum, this fund offers a compelling solution. It takes the guesswork out of rebalancing and provides a passive way to stay aligned with market trends. The success of this fund could also pave the way for other multi-asset crypto ETFs, further bridging the gap between traditional finance and the digital asset ecosystem. The journey towards widespread Ethereum ETF approval and adoption has undeniably generated immense excitement. These financial instruments promise to democratize access to Ethereum, allowing a broader range of investors to participate in its growth through familiar and regulated channels. The core concept is simple. An Ethereum ETF tracks ETH's price, offering exposure without the complexities of direct ownership. This simplicity is a powerful catalyst for adoption. The significance of Ethereum ETFs extends beyond mere convenience. They bolster Ethereum's legitimacy, potentially attract substantial institutional capital, and could contribute to increased market liquidity and potentially greater price stability over the long term. Drawing parallels with Bitcoin ETFs, the expectations for Ethereum ETFs are understandably high. However, this optimism must be tempered with a realistic understanding of the crypto market's inherent characteristics and the journey ahead. The allure of high returns must be balanced against the undeniable risks. Market volatility remains a constant. The regulatory landscape is still evolving, and the importance of due diligence cannot be overstated. For investors, the key will be to navigate this evolving landscape with informed caution, recognizing both the immense opportunities and the inherent risks that come with investing in the future of finance.